Welcome back. You're watching Traders Corner, and joining me as always is Garth McKenzie, founder and editor of Traders Corner. Garth, welcome.
Hi, Julieta.
Garth, we'll start talking about the S&P 500, which is under a fair amount of pressure. Well, I guess the tech stocks really had their most impact on the NASDAQ that we saw on Monday night. But the S&P is going to get caught up in the sell-off that we're seeing.
Yes, that's it. So you're right. I mean, there was a big sell-off in the tech. So the Amazons, Facebooks, Googles, etc., all down big time on Friday evening, as it looks like there's going to be antitrust investigations into those businesses and so on. So hence the big sell-off in those stocks. But you're right, that obviously does weigh on the S&P 500 as well. It weighed heavily on the NASDAQ, with those stocks being heavyweights in the NASDAQ. But of course, the S&P 500 likewise is suffering because of that. Now, last week on the show, I said to you we needed to watch this 2,800 level, as that was the neckline of this head and shoulders pattern that I'd spoken about over the last few weeks. And now we have broken down below 2,800. So that validates that head and shoulders pattern, which projects to a downside target of 2675 down here. Along the way, you've got some support at 2750, so that might act as a little bit of support, and perhaps it bounces from there and then goes and retests the underside of that head and shoulders neckline there at 2800 before maybe falling back again. But broadly speaking, what I'm saying is that that technical damage that's been done there is not to be ignored. I think the fact that that head and shoulders pattern has validated is not good news for the bulls, and it probably does mean that we've still got further downside on the S&P 500. But in the immediate future, it's possible we do stage a slight bounce, but I think 2,800 now becomes quite stiff resistance on that market.
And what about our own market? Because now there's all these warring forces at play, because you've got the Rand, which weakened very sharply today on the back of terrible GDP numbers. Yeah. But that's good for the Rand hedges and some of the Rand hedges, some of the diversified resources companies, and some of the gold counters.
Yes, exactly. The gold shares have been going vertical lately, so that's on the back of a firmer gold price and on the back of a weaker Rand. So in terms of our top 40 index, and again, the technical damage that I've cited over the last few weeks remains intact. You can see how we broke down below the bottom of that rising channel earlier in May. Now, we have bounced over the last week or so, and like you said, it's come on the back of a weaker Rand. It's also come on the back of some firmness in Naspers, and then some of your miners have been moving higher as well, which has helped the index to move higher. I think what we've got to watch for in the near term is the underside of the 50-day moving average there. That's that red line, which comes in just below 51,000. I think if we were to get there and reverse down from there, then that might signal another leg lower is to come. So I think we've got to watch that quite carefully in the week ahead. Broadly speaking, that chart to me still doesn't fill me with excitement in terms of looking for more upside. If anything, I think it's starting to say to us it's possibly starting to make lower highs now, and we might still have some choppy months ahead of us.
Yeah, well, I mean, the SA Inc. shares in particular are going to get whacked because it's in fact, we've seen it in the numbers. We've seen it in the share prices already, the contraction that we're seeing in GDP.
Yes. You
just had to read a company SENS statement, and you would have known that already, so you shouldn't be shocked.
No, you shouldn't. Look, I think the shock is the extent of the GDP contraction. Minus 3.2% is a massive number. And broadly speaking, we were looking for consensus numbers of about minus 1.6%, maybe minus 1.8%. So the contraction in GDP is double that figure, which is a real shock. And like you say, the Rand has weakened on the back of it. But yes, not too much of a surprise in the sense that we've seen how poor the results have been for the SA Inc. stocks. And all of these companies have been citing difficult trading conditions and how they expect it to remain tough. Yeah. So we really are in quite a mess locally. And from an SA Inc. perspective, a very difficult trading environment still.
Which leads me to the next two trades that we're going to discuss, which you've exited and done well out of. So Bidvest, it looks like you sold probably at the right time.
Yeah, I think so. So last week we did this trade in Bidvest. There's the chart of the stock up on the screen at the moment. What I identified on last week's show was the fact that this 190 Rand area was where there was quite a lot of support. You can see there's lateral support there through all the lows going back to November last year. And also there's that upward trend that goes back to November last year as well. So 190 Rand was a big level. Also, part of the reasoning behind the weakness that we had seen was that South Africa had been downweighted in the MSCI Emerging Markets Index, and a lot of selling pressure had been focused on particular couple of stocks in our market. One of them was Bidvest.
Yes.
And that depressed the share price quite aggressively through the middle of May. It then stabilized towards the end of May, and that was when we decided last week to buy 310 CFDs at 195 Rand per share. And I said then my stop loss would be below 190, and we would look for a move up to 206 Rand where the target was. That 206 Rand target is pretty much the underside of the 50-day moving average there. Now, it got there within 3 days, and this is always what I say, the best trades typically work straight off the bat, and you get your result very quickly, and this is a classic example of exactly that. So we actually did sell out at 206. I didn't decide to try and run a profit here. As regular viewers will know, I mean, where I've tried to do that recently, where I have got a good trade and I've said, let's try and run the profit and let's see if we can extract more out of it. Well, my greed has been, has bitten me on the bum, as it were. And we've ended up seeing a lot of good trades actually turning out not so good for us. So this time I thought, you know what, let's just sell at the target price. Let's put some money in the bank. It's been a difficult month or two, so let's put some money in the bank. So we did. We sold at 206 Rand, and that allowed us to realize a profit of 3,210 Rand after all transaction costs are considered.
Well, that's not bad for a week's work.
Not bad.
And what about Netcare? Because you've done, similarly, you've entered and exited the trade there.
I have. So this one's a little bit different. It's came under pressure in the middle of May, and particularly in sort of the latter part of May, following a director that was effectively a forced seller of 200 million rands worth of the company's shares in order to rectify financing on effectively a leveraged trade exposure, if you will. And that put pressure on the share price, and I think it also sucked in some other selling as well along with that. And our feeling was that at the time that selling pressure was probably overdone and that there would be some relief on the share price. We went long last week at 18 Rand 45, and I said I'd use a stop loss below 17 Rand 90, and then I was looking for a target of 20 Rand. But I've actually decided to exit the trade. Yesterday, in fact, I put a sell order in. I just left it in for the day at 19 Rand. And it so happened that we traded, and it was actually, that was the highest trade for the day. So we were quite fortunate with that. The reason why I decided to sell was just that Netcare has this habit of getting stuck in these ranges. And my sense now is that it probably just remains depressed at these lower levels, probably tracks between 18 Rand and 19 Rand a share for a couple of weeks.
And then it just ties up capital.
Exactly, ties up capital, ties up focus, and it just generally is frustrating. So I decided to exit at 19 Rand. As I said, it's way short of the profit-taking objective. So it's not going to give us a great risk to reward ratio really, but anyway, it's money on the board. We've banked a profit there of 1,350 Rand effectively. So it helps. We're hitting singles here, which is helpful.
Is what the World Cup team is doing, really. Although we wish they weren't.
I guess our World Cup team's hitting too many singles and not enough sixes and fours.
Yes, so we feel their pain.
Yes.
Okay, Garth, so those are the two trades that you've entered and exited. The stock that you're looking at this week is Long4Life. You haven't actually entered a position, but why does it appeal to you? Yeah,
in a tricky trading environment, this stock, in this chart in particular, stands out for me for a number of reasons. As you can see, look, technically there you can see that it's been making higher lows since March. And it's bumping up against 5 Rand here. You can see those flat tops at 5 Rand per share. It's a clear indication that there's a seller at that price. But my sense is that if you take the fact that there's higher lows here, and also given the fact that this share price has really outperformed, it's actually held up exceptionally well during the month of May when the rest of the market's been very weak. That to me is quite an encouraging sign, and it suggests to me that the likelihood is that we will eventually see a break to the upside here. And if it breaks out above 5 Rand, in other words, if that selling pressure is mopped up, then I think you could see quite a quick move to the upside. If you look at what happened back in late April, there was a similar setup where there was a clear seller sitting at 4 Rand 60 for a number of weeks. And eventually, once that seller cleared off, there was a very swift pop to the upside, and the share price started to trade a new range. So my sense here is that if you're patient and you accumulate the stock around these levels, it probably will pop through 5 Rand at some point, and I think that then opens a bullish break for the next upside.
I mean, how much realistically could one expect to gain from Long4Life if it does breaks through that R5 level?
Well, I think a short-term target, if it broke out through R5, would be a move to about R5.30, R5.35. So you're talking about a 6 or 7% potential upside. But my sense is that if it happened, if that breakout above R5 occurred, you would probably get that move to the upside relatively quickly. Because it does almost, to me, it almost looks as if it's like a pressure pot, busy building up the pressure inside and waiting to pop to the upside.
Garth, I mean, given that we've got a couple more minutes, do you find that some of the smaller stocks may be less susceptible to the shifts in large-scale sentiment that sway the top 40 shares? So even though Long4Life is very much an SA Inc. share and it's very exposed to the South African economy, and so if you look at a GDP contraction of 3.2%, you're going to sort of lump everything and maybe not want to go anywhere near it, or these smaller shares that have maybe more easily discerned individual characteristics are in some way immune from the larger sort of inflows and outflows of money.
I think that's very much is the case. You know, we talk about a stock like Long4Life doesn't really fit into any of the major indices, you know, like your top 40s or your industrial indices or any of those sort of things.
Yeah.
It doesn't fall into those. So it's not a victim of broader flows.
Hot money, essentially.
Yeah, exactly. So a stock like this does tend to have a little bit of a life of its own, and I think that's also very much explained in the chart where you can see how it has outperformed during the month of May. The stocks remained pretty elevated throughout May when the rest of the market's been coming under a lot of pressure. The thing one does just need to be careful of with these smaller types of shares is the liquidity, because not all your small cap shares are that tradable.
Yeah.
This one is okay. It does trade a couple of 100,000 shares a day, and in some cases can trade over 1 million shares a day. So there is some liquidity here, which is nice, but it's kind of rare at the moment. You'll find a lot of your smaller cap or mid cap shares they're just not really tradable in terms of active trading, because there's not enough liquidity available.
Okay, well, it's a stock to watch. So let's wrap up with the portfolios, how they stand. A couple of gains for the local portfolio, looking a lot better than it did last week.
Yes, we've had a nice week based on the fact that Bidvest moved in the right direction for us. So we made 3,200 Rand there, and then Netcare we made 1,300 Rand there. So it has helped to push the profit ticker a little bit higher for the week. We're sitting just shy of 160,000 Rand there, and remember we started the year with 150,000. So it's still slow going, but at least we are on the right side of the ledger there. And then our offshore portfolios, nothing's been done there for some time now. We're still languishing. My focus has been more on the local side of things recently, but I'll keep an eye on offshore opportunities.
Yeah, and hopefully some of the moves in the last couple of days have thrown up some interesting opportunities.
Sure.
Garth, we have to leave it there. Thanks as always for joining us on the show. Garth McKenzie is founder and editor of Traders Corner.